In July 2025, activist investor Jeff Smith quietly bought 9% of TripAdvisor. When management ignored his turnaround plan, he threatened to fire the board and force a full sale of the company. That got their attention. And recently, TripAdvisor agreed to sell just one of its 3 businesses to American Express. But here's what nobody is talking about. Since the current CEO took over in 2022, shareholders have lost $1.6 billion. In that same period, management paid themselves $412 million. Most investors still pricing this like the old broken TripAdvisor. Today, I walk you through Starboard's own numbers so you can see the massive upside the market is completely missing. So what is the problem? The stock was already at all-time low. Then in January 2025, another company offered to buy all of TripAdvisor for $18 to $19 per share, nearly double where the stock was trading. When management refused to even sit down with them, they called the offer inadequate and walked away. Meanwhile, the business kept getting worse. Few people were visiting TripAdvisor every year, less money was coming in, costs kept going up, and competitors like Google and Booking.com kept taking over the market for travel reviews, all going in the wrong direction. Now here's what it makes really frustrating. TripAdvisor has 1 billion reviews, and it's one of the top 10 websites that AI platforms uses. TripAdvisor ticker is TRIP, and it trades on Nasdaq. The company has 3 businesses inside. First, The Fork, Europe's biggest restaurant booking app, agreed to be sold to American Express. Deal not yet closed. Second, Viator, a marketplace where you book your tours and experiences when you travel. You can think of cooking class in Rome or a safari in Kenya. Over 400,000 experiences available. 65,000 tour operators worldwide, 4 billion in bookings last year alone, growing at 20% per year since 2019. Then there's the third part, the brand TripAdvisor. The website and app you probably already know. 300 million people visit every month, 1 billion reviews. Revenue has been falling every year, but here's what makes it interesting. When you ask ChatGPT where to go on holiday, it uses TripAdvisor data. And it is the top 10 websites that AI uses as their source. And TripAdvisor is already an official ChatGPT partner. When someone books a tour through ChatGPT, it goes through TripAdvisor. So real money. But so far they have barely touched it. Together, they bring in $2.1 billion in revenue, yet the whole company trades just for 6.5 times EBITDA, while competitors trade at 12 to 15 times. That gap is what Starboard spotted. So what does Starboard want? So 3 things. First, sell the Fork. It's the smallest business and the least connected to the rest. Similar companies have sold for 5 times revenues. At that price, the Fork alone could be worth over $1 billion, according to the presentation of Starboard. Second, fix Viator, the biggest opportunity in the whole company. Margins have gone from 4% in 2024 to 9% in 2025, moving in the right direction, but Booking.com and Expedia run at 25 to 30%. The CFO of TripAdvisor has even said that TripAdvisor can get there one day. Close that gap and the value created is enormous. Third, transform brand TripAdvisor, stop letting revenue fall, cut costs, build an AI product, sign licensing deals, start charging for the data that AI companies are already using for free. Do all 3, and Starboard owns numbers show that the stock could be worth 2 to 3 times where it's trading today. But here's the thing. Starboard gave management months to act. Meeting after meeting, nothing happened. So in February 2026, they sent a public letter to the board saying enough is enough. They want to replace the majority of the board and they want the entire company put up for sale. So what happened next? Management blinked. In March 2026, just 1 month after Starboard's public letter, TripAdvisor signed a cooperation agreement. The board was expanded from 8 to 10 directors. 2 new Starboard-aligned directors joined immediately. 2 more will join at 2026 annual meeting. Chairman Craig Maffei, if I pronounce it well, announced he is stepping down. And Starboard got a seat on the compensation committee. People now decide how much to pay management are the same people whose job is to make shareholders money. So that's a good thing. So recently on June 15, 2026, TripAdvisor announced the sale of the fork to American Express for $700 million in cash. Represents 46% of TripAdvisor's entire market capital at the time of the deal. Now the question is whether Viator can become what they think it can be. So let us run the numbers. Before we get into the numbers, a quick disclaimer. This video is for educational purpose only. Nothing here is financial advice. Investing involves real risk. You can lose some or all or even more than your money you put in. Always do your own research. So let us run to the numbers. I break this into 2 cases. First, the fork, already agreed to be sold at American Express for $700 million. Deal closes before end of 2026, so the money is coming in. Second, Viator. Last year, Viator made $91 million in EBITDA. That comes straight from the 2025 annual report. I use 12.3 times that number as my multiple. That's exactly the average of what comparable online travel and marketplace companies trade at today, according to Starboard's own data. So 12 times $91 million gives us $1.12 billion. So the base case total is $700 million plus $1.12 billion. That's $1.82 billion. Subtract $50 million in netto debt. That leaves us with $1.77 billion. Divide that by 116 million shares outstanding. That is $15.25 per share. Now the upside case. The TripAdvisor CFO said himself that Viator can reach margins similar to Booking.com and Expedia. So those margins are 25 to 30%. I use 27.5% as the middle. 27.5% of $924 million in Viator revenue is $254 million in EBITDA. Times 12.3 is $3.12 billion. Add the fork at $700 million, total is $3.82 billion. Subtract $50 million netto debt, divide by 160 million shares, that is $32.90 per share. And the last part is the brand TripAdvisor. This is the hard one. Starboard's own presentation does not put a clear standalone value on it, and honestly you can argue it is worth zero. Revenue has dropped. This is a business going in one direction. To value it, I looked at 2 companies declining at roughly the same rate. USA Today and Versand, the cable spin-off of Comcast that owns CNBC and USA Network. Both are shrinking. Both trade at around 3 times EBITDA. So that's what I use for brand TripAdvisor, a 3 times multiple on a declining business. Conservative, maybe even generous. I estimate 2026 EBITDA around $190 million after another 8% decline. At 3 times, that is $570 million, divided by 160 million shares, and the brand TripAdvisor alone adds another $4.91 per share on top of everything else. So the full picture, base case, the fork plus Viator plus TripAdvisor equals $20 per share. Upside case, same assets, but Viator reaches 27.5% margin equals $37 per share. The stock today trades at $13. That is your margin of safety. That is the gap Starboard spotted. This is a capital light business, no factories, no machines, and the return on capital is over 80%. When I look at the competitive advantage, I do not think there's a real competitive advantage. I love pricing power, but of course, in these businesses, it's hard to find. Revenue has been falling for years. The only thing they own that is interesting in 20 years of real travel reviews, that is, of course, something. But Google and Booking.com and others are gathering the same information every day. So even that advantage is also shrinking. So what do I think? When I first heard TripAdvisor, I thought it was dead. I use Google and Booking.com myself when I go on holiday and check reviews. So Viator and the AI data story were a real surprise. The board members are stepping down in June. That's a start. But the CEO is still there. And under his watch, shareholders lost $1.6 billion. If Starboard can get everyone focused on Viator, that alone can create enormous value. The AI data angle is a bonus. Build a platform, let AI companies use the data and send them a bill every month. The value gap looks real. This company is on my watch list. At the moment, I'm fully invested, but if I had more money than ideas, then yeah, I would take a small position in this situation. If you watched the whole video, you are a hero. And if this video was helpful, just let me know in the comments.